Well, I think the trends are already well established. We're starting to see high-frequency trading accounting for more of the turnover on our markets in the States. We're starting to see that now take place in Europe. It's still early days, but I think people are quoting 60 to 70% of trading is now taking place, high-frequency trading, which means algorithmic trading. It means low-latency infrastructures. And we don't see that trend decreasing. In fact, we're starting to see demand for infrastructure within our liquidity hubs, that ultra-low latency infrastructure, from players who you wouldn't classify as high frequency, but who want the benefits of low latency trading. And I think that trend will continue. And as we spoke about, as we get more markets within those centers, I think we'll start to see a trend for more complex types of trading scenarios where multi-product, multi-leg strategies and so forth, where people are really looking for different ways of seeking that alpha. The other trend, I suppose, in market data, particularly in Europe, consolidated tape. So best bid and offer, because now we have market fragmentation, very similar to the model in the States, where it's very difficult for investors to understand what the best bid and offer is across these multiple execution venues. So I think we'll start to see cooperation amongst exchanges and vendors to create that consolidated tape. We definitely believe in the model of, rather than regulators mandating it, that the marketplace will find vendors to give them the standards or for that consolidated tape. Yes, I think we're also starting to see regulators talk more. They're starting to discuss more about their market structures and learn from each other in terms of how they should allow competition between markets, try and ensure there's a level playing field of competition between markets, applying the same rules of engagement between markets. And we're certainly starting to see that free flow of information between the US, Europe, and Asia. Clearing in the States, of course, is a very simple model. There's the DTCC that's for cash. I think people do want a clearing infrastructure that makes more sense in Europe. I think we've still tendencies to associated with national markets where there may be rules, or tax rules, regulations that seem to be getting in the way of a more uniform clearing model across European countries. But Euroclear, Clearstream, LCH, clearing houses like that are now starting to cooperate between each other, allowing clearing across their infrastructures for their participants. And more of that will continue, and I think the regulators will be more demanding of the clearing houses to cooperate between each other in terms of allowing greater competition.